Ah, we didn't got punched in the mouth. Portfolio, my portfolio is down. Here I am supposed to be helping you all with trading and, well, not trading, but investing, and I'm losing money. What should I do? I should just take my losses and sell everything, right? Wrong, wrong, wrong. Yes, we are down. Yes, January, February, and this month, March, I have put $100 into um, stocks, Robinhood via Robinhood, and as you can see through the portfolio, this is starting January 2nd of this year. New decade, new year, new you, right? Exactly. So we're supposed to be reinventing ourselves. We're supposed to be bettering ourselves. We're supposed to be doing good things, right? January deposit $100. February deposit $100. March deposit $100. Bought 2 shares of Coca-Cola, 3 shares of AT&T, and T, and 1 share of Verizon. As you all can see right here, Coca-Cola 2 shares, AT&T 3 shares, Verizon 1 share. Even bought some crypto, you know. But this virus is circulating around. Cities going on lockdown. Government's supposed to be distributing stimulus checks, and everything is going haywire. And my portfolio was down $76.69, which equates to a 25.54% decline. My portfolio is down 25.5%. Should I feel bad? No, no, no. These are buying opportunities. These are legitimate buying opportunities. If we go over to CNBC.com, and by the way, excuse me, I suggest you all download the CNBC app because it keeps you up to date on pertinent notifications that's going on. We see some articles here. Dow drops 600 points as Senate fails for a second time to advance uh, virus stimulus bill. Now today is this is I'll be posting this day the same day. It I'll be recording this day the same day it posts, March 23rd. Stimulus bill is supposed to be coming out, meaning every working American. There's some stipulations there. Supposed to be getting what, 1,200, or $1,200, $500 per child, but it failed. I just looked at the a live viewing of I think the Senate on Washington Post YouTube, and I heard the debate, but it was failed. It was blocked. The Democrats blocked it. Also, you see the Federal Reserve just pledged asset purchases with no limit to support, markets. Stimulus bill blocked in Senate. Continues Talks continue, and a lot of things are going on per news. Now you come to the stocks. Boeing, if we look down right here in this metadata section, 52-week high was $398. Actually, it recently got as high as $440. Now, its 52-week low was $89 flat. Now, the market, the stock market decline is not the 100% reason of Boeing's decline. Boeing's the 737 MAX, Boeing 737 MAX plane that was plagued with engineering blunders. Remember the Singapore plane that went down, the Ethiopian plane that went down? Well, both of those planes were the 737 MAX. So the stock market isn't totally to blame for Boeing's stock decline. But the virus is going to be blamed for it. But for Boeing stock, excuse me, stock market is not to be blamed for Boeing's share decline. That's a large depreciation from $440 to $89 is a drastic decline. But it's a buying opportunity. If I go over here to Max, I don't think They haven't been showing. Okay, here we go. So this is the max chart from going back to 1980 when Boeing just first came on the market into its highs, right about, if I get my cursor up here, there, 424, about $424. And that was on February 22nd, 2019. Until this right here looks like a wall. It's back at 2007 highs. In 2007, right before the market crash, the housing market bubble, Boeing stock was around $98, $100, right where it is now. And then it crashed to, let's see, about $31.77 or 44 cents, about 75% decline. Now, since that crash back in 2008, it shot up to around from $31.44 to around $440. That is what you call being greedy when others are fearful. When Boeing stock plummeted from $100 to $30, that's a 70% decline. People were selling, people were frightful. Just now, right now, people are frightful. I put $300 into the stock market. I've lost 25%, 25.5% already. Should I be frightful? No, I'm not frightful. This is fantastic. Well, I wouldn't say fantastic because that's a wrong word to choose, because people are losing their lives because of this virus. People are out of work. People are losing their jobs, so forth and so forth. But as far as an opportunity for the long term, the word fantastic is correct in that situation, as far as increasing your plight in life, or increasing your lot in life for the long term. This is a fantastic opportunity. And it's not just Boeing. Boeing is just an example. The airline stocks, the resort stocks, the hotel stocks, all are taking a hit. If we go over here and look at a few airline stocks, we see American Airlines. American Airlines 52-week high was $35. It's at $10.12. Its 52-week low was $10.01. We look at United Airlines. Its 52-week high was $96.03. It's currently trading at $26.04. Its 52-week low, which was recent, is $17.80. If we go back to 2007, to the highs of 2007, like we did with Boeing, it was around $47.50. When it crashed on the 2008 crisis, it went down to $3.63, about $3-4. From $3 and some change to the highs of this to this current market cycle, it went from $3 to $90. Imagine using the word fantastic here in this situation. People losing their homes. People were being evicted at that time. Using the word fantastic as an opportunity to improve a person's lot in life 10 years ago would have been socially correct. But since then, since 10 years plus, 12 years plus since then, excuse me for the banging, I'm doing some work to my bathroom. My apologies for the noise. But since then, American Airlines stock went from $3 to $96 per share. Per share. If we go over to Delta Airlines is the same thing. Its 52-week high is $63. Its 52-week low is $19.10. It's currently trading at $22. And it goes on and on. We can look at Southwest, the same thing. We can even look at some oil stocks. Chevron. Chevron is a major oil company. Its 52-week high was $127. It also dishes out a dividend. It's currently trading at $53.65. Its 52-week low was $51.60. The stocks that I've picked up, which is Coca-Cola. Let me refresh this so I won't be logged out. Coca-Cola, AT&T, and Verizon. Let's look at them. AT&T, 52-week high was $39. You can may as well say $40. You could be generous. 52-week low is $26.08. It's currently trading at $26.56. Verizon, loss. Coca-Cola has losses. Coca-Cola's losses are more than Verizon and AT&T. Coca-Cola's 52-week high is, as you can see right here, $60.13. Its 52-week low is $36.27. It's currently trading at $37.12. That's almost a 50% hit. 50%. The average market crash is between 7 and 10 years. This current bull run current ending bull run is the longest bull run, I believe, in history. Before the 2007-2008 market crash, you had the dot-com bubble of 2001. The catalyst of that was the 9/11 attacks. The catalyst of the 2007 market crash was Lehman Brothers and Bear Stearns bankruptcy. The catalyst of this, not the cause, but the catalyst of this market downturn is this virus, this COVID-19 virus that's going around. But prior to 2001, you had 1995. Prior to 1995, you had 1987. Prior to 1987, you had 1979. Remember, I won't say remember, a lot of us wasn't born then. I wasn't born in the 70s, but there are photos in the 70s of the oil crisis. Highways were closed. That was around that time. So this happens over and over and over again. It's market cycles. But market cycles are opportunities to increase your wealth, to increase your income. Yes, it's painful. Yes, it's hard. I understand that. But they are opportunities. If you look at these charts, opportunities show. We can look at Coca-Cola. Back in 2007, Coca-Cola was trading right before the crash at around 30, let's say 30, $32. At the bottom of the 2008 financial crisis or housing bubble, it went down to $20. From $20 to its current highs of $60, that's a $40 increase per share. And that trend is throughout every stock in the stock market. Obviously, I can't put every stock charts up here, but hopefully you understand what I'm saying. Now, I have a spreadsheet here, and I'm going to show you all what my plan is in terms of purchasing stock. I plan on having for this portfolio overall, my own personal, this is not my own personal, but this is something that I'm doing to help you all see that investing is not hard. And this is great that I'm doing this at this time. I'm showing you all my losses. Yes, I lost. This is called an unrealized loss. What's important to understand is that yes, my portfolio is down, but this is what you call an unrealized loss. It becomes a realized loss if I were to sell my 2 shares of Coca-Cola, if I were to sell my 3 shares of AT&T, if I were to sell my 1 share of Verizon, then I will say I realize I lost money on these stocks, I'm selling, and vice versa. It's called an realized gain also. If I were to sell Coca-Cola, it's trading at $100. I say I want to sell Coca-Cola and I realize that gain. So right now it's called an unrealized loss because I have not sold. Yes, my portfolio is down, but as you can see over the long term, it'll go up. So right now I'm in an unrealized loss. Now, as far as this spreadsheet, this is something I threw together. I'm going to build this up more to make it more readable. I plan on having 20 to 25 stocks. Now, there are some finance YouTubers, personal finance YouTubers who have 40, 45 stocks. That's fine. But for me, that's too much for me. That's too much for me. A large portion of my stocks are going to be dividend paying stocks. My focus on investing has a focus on two things: dividend paying stocks and something called fourth industrial revolution. Fourth industrial revolution are basically new technologies that are coming out: space exploration, blockchain, autonomous driving, so forth and so forth. I'll do a separate video on that, but just know that my stock investing portfolio has a focus on excuse me, on dividend paying stocks and fourth industrial revolutionary stocks. So right now I have, how many of these? This is 8 stocks: AT&T, Starbucks, Verizon, Coca-Cola, ExxonMobil. Then I have Walmart Boots Alliance, Walgreens Boots Alliance, Walmart, and Walt Disney. So to illustrate my plan, I plan on purchasing stocks when they hit a 15, as you can see up here, top row, a 15% decline, 25% decline, 35, 45, and it goes all the way to a 90% decline. Hopefully it doesn't go that far. The average stock market crash is around, I want to say 30%. In 2008, the market declined 50%. In 2001, during the dot-com bubble, it declined 30%. Some stocks have declined between 30 and 40% already. AT&T all-time high was $39.70. It's currently at its current price. Well, it's currently 18. Let's get back to this. AT&T is trading at $26.56. So 25, 30. It's around 30. AT&T has hit around a 35% decline already. I'm still going to be deploying cash into the stock market. I'm still going to be buying stocks. I'm going to be averaging down. I'm going to keep cash on hand. So this first year, like I said, I'll be putting $100 into the stock market. Next year, I'm going to bump that $100 up to $200. But this first year, during the stock market decline, I'm going to be, with my $100, I'm going to be purchasing $50 of stock and holding $50 in cash. So as this, if these stocks decline more, I'll have more cash on hand to purchase more on the decline. So Starbucks has took around a 45% hit so far. Let's see, Verizon Wireless has took a 25% hit so far. Coca-Cola has taken a 45% hit so far, and I plan on buying an oil stock, ExxonMobil. ExxonMobil currently has taken a 65% hit so far. Now, as far as the stocks I've purchased already, Coca-Cola, I initially purchased Coca-Cola first share at $54.13. Second share Coca-Cola purchased at $53.28. So out of my 2 Coca-Cola shares, my average price I've purchased Coca-Cola was at $53.71. As you can see, Coca-Cola is has a 25% hit so far, which is trading around $46.67. Now, with Coca-Cola is a dividend paying stock. So Coca-Cola's dividend, I'm going to get a 82 cents April 1st. This is pending right now. 82 cent April 80. I'm starting on my words right now. I'm going to get 82 cent April 1st from Coca-Cola because I have 2 shares, 41 cents per share. Now with AT&T, my average AT&T purchase price is $37.01. I've received a 52 cent dividend from AT&T on February 3rd. When this paid out, only had 1 share of AT&T. AT&T's dividend is 52 cents. So now that I have 3 shares, next go around, I'll get, what's that? $1.50 to 53 cents. No, 56 cents. Where I only have 1 share of Verizon Wireless. So next month, which is coming up, and it is next week, Wednesday, when I put $100 into the market, I believe I may purchase some ExxonMobil. I'm gonna go for ExxonMobil. Remember I said out of the $100, I'm gonna only use $50 to purchase stock and $50 in cash. So if the market continues to decline, I'll have more cash. Let's say if more cash to purchase stocks at 45, 50, 55, 60% decline from their all 52-week all-time highs. So don't fret, don't freak out. I know a lot of people are in each other's ears saying, take your money out. I've heard people from 2008 say they lost money in the stock market, but that's when they sold their stocks. They sold everything, and they realized their losses. The peak of this portfolio was on March 4th at $318.98, and now it's trading at 228.04, about a 25% hit. It's fine. Now that 25% hit out of the stocks I have, which is pretty much average. Now, I think I got Starbucks up here. Do I got Starbucks up? Yeah, I want Starbucks also. I think Starbucks is going to be here for a while. I don't think Starbucks will be going anywhere anytime soon. During 2007, it was trading around. Oh, look at this. $18. It crashed to $4.89. Its 52-week all-time high, excuse me, was around $100. Right now, it hit a wall. This current crisis, it's at $56.65. That's almost a 50% hit. If we go back to my Excel spreadsheet, Starbucks is about a 45% hit. I want Starbucks. This is a great buying opportunity. I understand. You may be scared. I don't know, but in these times is when people make a lot of money. Because when the market goes back up, they bought these stocks at low prices. So I want to let you all know that yes, we got hit in the mouth. Like to paraphrase Mike Tyson, everybody has a plan everybody has a plan until they get hit in the mouth. Well, we're gonna keep our plan. Yes, we got hit in the mouth, but we're gonna keep our plan. So I'll let you all know that's what I'm doing. I'm going to fill out. I'm going to. I'm going to make this spreadsheet more legible or readable. I don't even think that's a word, but hopefully you understand what I'm saying. I want to fill out all the stocks I want to purchase to make up my portfolio. And hey, we're going to continue to rock. We're going to continue to rock. Don't be scared. I remember I opened up my first my first investing account with E-Trade during the last financial crisis, 2008 to no 2007, 2008, 2009 financial crisis. I opened up an E-Trade account. I didn't know what I was doing. I did not know what I was doing, but over time you learn, and that's what we're doing here. Over time, we're going to learn, and hopefully, I make this clear for you all. So, as always, don't forget to like, comment, subscribe, and hit the notification bell. Yeah. So with that said, hope you all have a wonderful rest of your day, and I will catch you guys on the next one. Peace.